Okay, so you are the beneficiary of a tax deferred type of account like a 401k or traditional IRA. These rules don't apply to a Roth IRA because taxes have already been paid on Roth IRAs. But all of those accounts where taxes have not yet been paid, like 403b plans, all of these types of accounts can be inherited by a beneficiary. Now the question here is, when do you need to start taking money out? When should you start taking money out? Um, you may have to take required minimum distributions if the person who originally had the account was required to take required minimum distributions. And it's really, you have to look at it on a case-by-case basis. But you may have to take some required minimum distributions. But there's also not penalties for drawing early from an inherited IRA or an inherited 401k or 403b plan. So they operate differently than they do when you're saving them up yourself. They don't operate quite like a regular retirement account does. So you definitely want to talk to a CPA about whether it's, or your financial advisor, about whether it's advisable to start taking distributions from those tax deferred types of accounts. They can bump you up into a new tax bracket, so you want to make sure that you're meeting with somebody annually to plan that, so that you're taking those out in a way that give you the least amount of taxes due on those accounts. So you also do have to make sure, if the person that you inherited that account from was not taking those required minimum distributions at a time when they were supposed to, that you can remedy that. So you need to fix that if they weren't already taking out required minimum distributions when they were required to. So it's kind of a complex situation. So if that does come up, you definitely want to contact a CPA or a financial advisor to get that taken care of. I'm Greg with the Ashcraft Firm. Thank you so much.